Hi, this is Acme with the Bulletin Board Heroes here at Fox Markets for Tuesday, the 22nd of February. Starting off with Cloudbreak, which has had a bit of a roller coaster today, but still on the upside here. We're actually up almost 50%, just approaching that line of resistance from November. So at least we know where the channel is now, which is heading towards 17 pence. So if you're a fan of the shares, end of day close or weekly close above 9 pence could lead to 17 pence perhaps by the end of next month, something like that. On the downside, probably looking at today's low around 7 pence as the stop loss after the jiggery pokery that we've had so far this morning. But still looking as though there could be one final leg to the upside in this situation, if only to retest today's intraday high. Onto a stock which where it appeared that we wouldn't actually stay below 20 pence or go back below 20 pence again, but obviously the Russia situation has changed that. We've got a fresh test of 1 year support, both at 14.5, well, around the 14.5 area, which was tested back in the summer in August and also back in January of last year. So triple bottom there. If you're an optimist, you'd say it's a triple bottom there for the shares at 14 pence, in the 14 pence zone. Looks as though the shares could recover after that triple bottom back towards 19-20 pence. Form a support for the shares relatively soon, so maybe over the next day or two. And key now will be to recover 20 pence to get the shares back up to the resistance line there, the main one from September at 25. So basically 14, 20 and 25, the technical points there on the Eurasia chart. Onto a stock which has had a less rocky ride. We've got Galileo Resources. And here you can see that the shares have managed to break a line from September. That seems to be quite an encouraging development. We've tested that line now as new support as well around the 105 level. And the view now is that while we're above, at least while we're above the 50-day moving average at a penny, we could see the shares not only retest 1.25 pence resistance from February, but also on a 2 to 3 month view, even head up to the broadening triangle from June last year, up to 1.9 pence. But with that rising 50-day line looking quite looking set fair for Galileo over the near term. Stock which I was going to sort of missed out from my list, but stock not going alphabetically, which is worth looking at the moment, is Evraz. Here we've had another bounce off that falling RSI support line from November. Chance of a bear trap there from below the 277 initial February low, so an end of day close or a weekly close above that could give the stock the chance of retesting recent resistance in the £3 to £3.20 level. I suppose you'd have to be a bit of an optimist on the Russia-Ukraine situation in order to highlight that, but let's see if we can get an end of day close back above 277 to trigger a bear trap there, obviously using 250 as a stop loss if you are bottom fishing that situation. On to a gold play, which is relatively new to the market. Here we've got GCAT, or Caracal Gold as it's known. Here we've had a 2-day bear trap from below the December support, so that was around 102, and above 102 we're looking for the shares to retest that resistance line there from October around 1.2 pence. The big sizzle in terms of the technicals here would be that we could see an end of day or a weekly close above 1.2 to take the shares back up to post-November resistance at 1.4 pence. Bit of bullish divergence there in the RSI window, so a lower low there for February, but the RSI didn't go lower, so that is a plus if you are looking for the stock to trade higher near term. Moving along to Hurricane Energy, and here we've got shares in a bull flag at the highs, which is encouraging. Just want to see an end of day close above the top of that rising March trend channel from last year. End of day close at 8.25 plus could take the shares up to a new new technical target at the August resistance line projection at 12 pence as soon as the end of next month, especially given the way oil prices are going. Stock from Aquis, which is actually looks like it actually might deliver the goods over the near term on a technical basis, is Love Hemp, especially in the wake of the latest news regarding eBay and Love Hemp. Here we've got a rising trend channel which has been in place since last month, bounced off the channel, also broken now above the 50-day moving average. Looks like we'll hold above it at 105 and above the 50-day line, looking for as high as 1.9 pence over the next 1 to 2 months, which is the top of last month's channel. The other positive to note is we've had a bear trap gap reversal, so we broke the initial January support there around 0.73 for a couple of days and then gapped up, and we've never filled that gap, and we've had a decent U-shaped bull flag, as I would call it, which should be a pretty strong signal, provide strong price action over the near term. Final point to note is that we've got a bullish divergence line there as well. So the rule here, which is a new rule after 30 years of looking at these things, is that the third touch of a bullish divergence line or a RSI uptrend line is the buy point. Here you can see that came in basically around the low, so 0.7, 0.75 worked pretty well in terms of giving us a potential entry there for people who like using that kind of technical analysis. Moving along to NTOG, or otherwise known as Nostraterra. Here we made quite decent progress here. We've had the gap higher off support and filled the gap and then traded higher. But the sideways shuffle, as I call it, above a rising 50-day moving average, a decent signal there for Nostraterra, and above the broken July resistance line, looking for as high as 0.57 over the next 4 to 6 weeks. Once again, we've got a bullish divergence line, and I suppose there could be another dip, or this is the dip in terms of giving us to the entry point, but really it's a trend line break, looking for just over half a penny on the near term for Nostra. Stock which I should have looked at before but didn't is Rearbold Resources. Here we had a gap to the upside after a sideways shuffle above the 50-day moving average. We also had a potential entry there on the long side with a third dip at the uptrend line in the RSI window around 0.2. That's progressed well, and end of day close through 0.29 really could open up the shares to a move to the top of that October rising trend channel at 0.46 over the next 1 to 2 months, or maybe a little bit sooner than that, so 6 to 8 weeks, something like that. But could get there by the end of March if we are lucky. Just a couple of stocks to go now. One is the very difficult one. We've got THG, not the most popular stock on the market. We had that failed rally through £1.40 in the early part of February, bull trap through £1.40, which was not very nice. Current situation is we've got a third test of the bullish divergence line there. Well, actually, it's a fourth test, in fact. But one would probably want to wait for a break of that January resistance line around £1.12 before calling the shares up to the £1.40 area again. But possible bottom fishing opportunity, or some would say falling knife opportunity if you are in that kind of mood. Rather easier situation comes in the form of Union Jack, which is a situation which I wish I'd seen at the time. Here we had a bear trap gap reversal, bear trap from below 11.5 pence, 2-3 days under that, and then gapping higher. And since then we've had the sideways shuffle along the 50-day moving average, which is now rising strongly. The view here is that while we're above the old January peak at just under 18 pence, we're looking for 28 pence at the top of a November rising trend channel. But here we had that third test of the uptrend line in the RSI window around 14-15 pence, which has worked rather well for people trying to bottom fish Union Jack. That's it from me today. More updates tomorrow.